Glad to have you here with us on the Retirement Key with financial advisor Abe Abich, founder of Abich Financial Services. If you have questions about your setup for retirement, we're wondering if you actually are set up for retirement in any way. Let's get to work figuring that out. TheRetirementKey.com is where you can start the conversation with Abe and his team. We also have links posted in the show notes. And don't forget to subscribe to our YouTube channel. Again, just search the Retirement Key on YouTube and you can find us that way as well. Lots of online resources. Another one of the resources I wanted to remind everybody of is the fact that you have finally published your new book that you have been working on for, gosh, I feel like it's been three years now.
Off and on for a few years. Yep.
Yep.
It finally just came together here in the last couple months.
Yep. The Retirement Mountain, the 7 steps to a long-lasting retirement.
Yes.
It's just a little over 100 pages long. It's a super easy read. You can read
Probably
it in a couple hours.
Hour and a half, 2 hours max.
Gain a lot of insight and information about the things. There's a few boxes you want to make sure that you have checked off in your plan to make sure that you're covered in all the areas you need to be covered in for your retirement. I like how you coined this term, the second phase of your financial life, because for so many people now, it's not just 10 years. It's a whole new life. It's 20, 30, 40 years in some cases of retirement.
Could be. Yep. Retire at 60 and live to 100. It's possible. Retire at 65 and live to 90, 85, 90, 95. Absolutely possible. And you better plan for it.
Better plan for it. But let's plan for it. Let's plan for all of the things that you want to do in those years, making sure that you live the life you want to live.
Heck yes. What do we retire for?
Right.
Retiring not to have any fun? No,
you worked so hard to get here. You saved all this money. You've got your $1 million, $5 million, $10 million nest egg, whatever it is. Let's make that. You worked for it. Now let's make it work for you.
Absolutely.
One of the areas that it's more of a sensitive conversation, the idea of long-term care, because when people think about retirement, they want to think about buying that convertible, hanging out with the grandkids, going on those vacations. The idea of when we need long-term care is not the conversation that we want to be focusing on. However, especially for couples, a case scenario where if one person gets ill and then you have to drain your savings to support that person, but the other person is alive, well, and kicking for another 10, 15 years, what kind of circumstance are they going to be facing? So you actually say that step 6 of the 7 steps in your book, chapter 16, don't forget long-term care. And that's what I wanted to talk to you about today. The idea of, by the way, if you wanted a copy of this book, go to our website, TheRetirementKey.com, click on the media tab. There is an option there to select book. We also have links posted in the show notes. But let's talk about life insurance policies. A lot of people hear life insurance policy and they just think about that thing that you got in your 20s or 30s when you and your spouse were young and you had a couple of kids. And if the main breadwinner were to have something happen to them or, God forbid, pass away, you got to have that life insurance policy there to protect your family. That's what a lot of people think about life insurance, right?
Yeah, that's true. Yes.
However, there is this hybrid policy that has come about. It's been around. These hybrid policies have been around for a while now.
They have been.
And they can pay for long-term care. And I guess a lot of people don't know about the options they have in this space, Abe. So that's what I want to talk about. What do we need to know? How do these things work?
Yeah. So when you're young, you're building wealth, kids under the roof, taking care of kids. Oftentimes you have more debt than savings and assets, and you need life insurance to be able to cover income if one of you were to go and pass away, right? If your income stopped, you passed away, pay off the house, pay for college education, you need life insurance much more than you need it in your 60s and 70s when you have several million or more saved. But a lot of our clients want life insurance into retirement. There's a difference between need and want. You need it in phase 1. A lot of our clients want it in phase 2. They may not need it anymore because they have millions saved, real estate and all this that could generate income for the other spouse. But a lot of our clients want to pass on money in the most tax efficient ways possible. A lot of our clients want their family to be taken care of, spouses, kids, grandkids, and life insurance. The right kinds of life insurance can do just that, because all life insurance proceeds, when they pass on to family members and your loved ones, pass on 100% federally income tax-free, all tax-free. And nowadays, there are life insurance companies like the Prudentials and the New York Lifes and Nationwides and Lincoln Financials of the world that not only obviously continue to offer the regular life insurance that passes when someone passes away, but also offers these living benefits where you can accelerate and spend down the death benefit while you're alive for a living need. And we have real life examples of how clients have actually done this.
Okay.
I'll give you one right now.
Yeah.
We have a couple out in the Front Royal, Winchester area of Virginia, about an hour, 35, 45 minutes west of us. And the husband is in his mid-60s and the wife is in her late 50s, maybe 8 to 10, even 12 years apart, perhaps.
Okay.
And just earlier this year, the wife in her 50s got diagnosed with stage 4 of terminal cancer. And we're praying for her and we're hoping that she survives this and
50s,
beats
you
it.
Said?
Late 50s,
That's
not
so
even 60.
Young. Golly.
A couple of years ago, they became clients. And obviously, we're helping them manage their money and we put together a retirement plan. But I noticed that their term life insurance policies were expiring within months of us working together.
Okay.
So I recommended, with them both still working, that they purchase new term life insurance policies that would just take them through the rest of their working career. So that if either one of them passed away while they're working, they could take care of the other and replace that income. And they're like, of course, that makes sense. We want to take care of each other. You know, they're talking about premiums that are $100 a month or something like that. Not expensive. Okay. So, but they didn't have to do that. They could have said, well, Abe, we've got millions of dollars saved here and we've got real estate and we've got our business and we've got all this stuff. Do we need it? They knew they maybe didn't desperately need it, but they wanted the life insurance at that point, you see? So they bought it, went through underwriting, got their blood and urine drawn and things like that, got approved, took out the policies. 2 years later, the wife gets this stage 4 terminal cancer diagnosis. Well, this policy, she just got cut a check for like $850,000 of the million. The insurance company fronted her, accelerated the death benefit down while she was alive, cut her a check for nearly $850,000 tax-free that she and her husband can use while she's alive if she doesn't beat this cancer, to take some trips and spend the money in the ways that they wish to.
So this isn't even
before
like
she
medical.
Passes, if she does.
This wasn't to cover medical bills. This was free and clear.
No.
Here's $850,000 to do with what you want. There's no stipulations about how to spend it.
That's right. She just had to be terminally ill.
That's it. I mean, you hate that this is what's brought them there, but I mean, that's an incredible policy opportunity.
It is, and that can happen if you're diagnosed with cancer, heart attack, stroke, things like that, a critical illness, a long-term care need. Maybe, she's not at the point yet, but if she does end up requiring care in her house, oftentimes that will happen and the situation gets worse. The cancer may start spreading. She may need care in the home sooner than later. And you know what? Family members, as much as they try, they can help somewhat.
They can.
But you know what?
It's not the same.
A family member cannot be by the bed 24/7.
That's right.
It's darn near impossible. And I'll tell you what.
You just can't ask that of somebody.
Very stressful.
People have jobs and kids and they want it. It's not even want, it's ability.
Yeah. And you need to know what to do too. So typically you want someone that's licensed and certified, like a certified healthcare nurse, right? To come in and know what they're doing and know when they need to call 911 and all that stuff, if they're in the house. So but just a really good story in that, they had this coverage that they could accelerate and use while they're alive. And although the situation isn't, great, they were really thankful for these plans that allowed them to tap into these hybrid policies and use them while they're alive. Another example of clients coming on board in Western Loudoun County, just 20 to 30 minutes from our offices, a doctor and wife. And the husband has a policy he funded years ago with about $2 million in death benefit, close to it, and almost $1 million in cash. This is like a whole life or universal life plan.
Okay.
But the one key thing that was missing in this coverage was that they had no long-term care built in.
Okay.
So we recommended an exchange, a movement from the current plan.
Going to ask, because you just brought up the idea of that first couple. They originally had term life insurance,
right?
So for them, they just went a new policy. But if you have something, because we've talked about before in conversations, like if you have an existing annuity, like come in for an annuity extra, because there's opportunities to not switch, but to roll over, to transfer out some things so you
Update,
don't lose
improve.
everything. Yeah. So is that an
Update,
option
improve.
for some life insurance policies?
Absolutely. And so this gentleman had already funded the plan. He's not paying any premiums into it. He got almost $1 million in cash in the policy and almost $2 million in death benefit funded just from prior years of premiums and contributions. Wow. So they're sitting on this nice asset in that you've got tax-free cash, a tax-free death benefit. But one of their biggest concerns being in the healthcare field is that they would have a long-term care event. And although they have millions of dollars saved, Medicare doesn't cover healthcare events like long-term care. Who pays for it? The family, and out of your own assets typically. So what we did is we recommended an exchange from their current plan into a new plan, and the new plan offers long-term care built inside the death benefit that will allow him to spend down the $2 million death benefit at $40,000 a month if and when he ever needs long-term care. $40,000 a month.
$40,000 is a lot.
He's 65. Let's say he needs care in 20 years, right? 85.
Yeah.
Well, the average cost of nursing home care and in-home care today is like $100,000 to $150,000 a year. Let's say it doubles and it goes up to $300,000 a year in 20 years, which easily could. This policy is going to more than cover that care.
Right.
And they don't have to dip a penny into their life savings. So they can preserve their life savings and use the insurance for what insurance is designed to do. Preserve
what about the
assets.
The death benefit acts as what would cover for the long-term care. What about that $1 million cash? Is that still its own?
So what'll happen is, let's just say, Heather, he needs care and he needs it for 3 years and it's $1 million cost. He can spend down the $2 million death benefit to $1 million. Let's say he passes at that point. There's still $1 million of death benefit left that would go to his wife.
Got it. Okay.
Yeah. But he's got a policy now, a hybrid plan that he doesn't have to die to use, that he can use while he's alive to preserve the family's wealth and assets.
Got it.
These are things that wealthy put in place. If you've saved a lot of money, and I'm let's say it's $5 million or more, you've done a really good job of saving. You need to wrap protection around your portfolio and assets as much as possible, not just from the markets, but from things that can foul up a great plan. Healthcare can certainly be one of them. This is just one of many ideas that we help our clients with to protect against a healthcare event.
There is, as you just said, there is so much more risk in your retirement years than just the markets. So not only pointing out the various areas of risk, those various spaces where you could be vulnerable and not even realize it. That's one thing that Abe and his team do, and every single day in their office it can do for you as well. But also showing you what your options are, how to remedy these risky areas for yourselves, reduce your risk, add layers of protection for you and your family moving forward in the years ahead. TheRetirementKey.com is where to start this conversation with Abe and his team. Again, links posted in the show notes. You can click there if that's more convenient, or visit us anytime at TheRetirementKey.com.